Hey everyone, there's a bloodbath in the stock market. Nifty has fallen below the levels of 16,000 and mid-cap and small-cap sector has corrected even badly. And at individual stock level, this correction is even crazy. Many stocks are down 50 to 60% from their peak. In fact, I was just doing some analysis and found that in the Nifty Mid-Cap 150 index, 70 stocks have corrected in the range of 30 to 80%. That's 46%. So 46% stocks in Nifty Mid-Cap have corrected by 30% and more. And within Small Cap 250 index, 150 stocks have corrected between 30 to 80%. So basically, 60% stocks in Small Cap index have corrected by 30% or more. Now, many of you would have started your investment journey after the COVID crash. And in case you have started investment in last 1 year, then there are chances that your portfolio would be in red. And let's be honest, nobody likes to see losses in their portfolio. But this type of correction results in two types of actions. On one side, you will have a set of people that are in complete panic mode and thinking of selling their stocks and exit from the stock market, or probably would have already exited in loss. On another side, there are a set of people utilizing every fall to accumulate quality stocks. Now, which category I fall into, I'll tell you in the later part of this video. But before we come to conclusion of whether you should buy or sell, first we need to understand why did the stock market fall? And then second point of discussion is, can market crash further? Finally, in the third part, we will discuss should you sell your investment or not. But before we begin, let me clarify, this video is only for long-term investors looking to create wealth in the next 5, 10, 20 years and not for traders looking for short-term profit. Alright, let's get started. Now I'm sure if you are tracking the economy, then you would know why the markets are falling. We are in a highly inflationary environment where prices of energy, oil, commodity, everything has gone up to crazy levels, and that is being reflected everywhere. Be it your grocery shopping or travel or fuel, everything has become expensive. While inflation within a certain limit is good for the growth of the economy, it should be within limit, because after a point it becomes dangerous. Hence, central banks all over the world try to control this inflation. And one most powerful tool to control inflation is interest rate adjustment. Now, as far as Indian stock market is concerned, it is not only dependent on Indian economy but also upon the foreign investment from USA. Hence, we need to keep a track of both Indian macros as well as US macros. And even in the US, inflation is at the peak. In fact, it is at 40 years high. Hence, central bank in both India and USA have increased the interest rate to control this inflation. RBI has increased the interest rate by 40 BPS and US Fed has also increased this interest rate by 50 basis point, that is 0.5%. Now, there are two key questions. How can an increase in interest rate reduce inflation, and why stock market is falling with interest rate hike? So the explanation is simple. When RBI increases the interest rate, it becomes costly for banks to borrow money from RBI. Hence, banks also increases the interest rate on loans. In fact, after the recent hike in interest rate, the banks have already increased their interest rate on loans. For example, Bank of Baroda has increased the home loan interest rate from 6.5% to 6.9%. Federal Bank's lowest home loan interest rate has gone up from 7.65% to 8.05%. So basically, loans would become costly, and that would demotivate people to borrow money, and hence would reduce the demand for products and services. For example, you might want to buy a house or car, but due to rise in interest rate, you might delay your plans to take loan. Also, it would demotivate companies to borrow money and hence impact the supply side. So, fall in both supply and demand would reduce the money flow from the market. And once the money flow would reduce, it would help in controlling the crazy inflation in both India and USA. Hope it makes sense. Now, second question is, why stock market is falling with interest rate hike? It is because when the interest rate increases, the bond yield also increases. Hence, debt market becomes more attractive than stock market. For example, during COVID, the 10-year bond yield in USA fell down to below 1% and touched levels of 0.5%. Now, who would want to invest for 0.5% yield? Hence, a lot of money got pumped into the stock market. And today, that 10-year US bond yield has gone up to 3%. That's very attractive for US market. So basically, with rising interest rates, it becomes more attractive to invest in fixed income instrument, as now you are getting higher interest rate. And that means investors pull out money from stock market and put it in fixed income instruments like your FD, bond, etc. And when they pull out money from the stock market, obviously it will fall. And that's exactly what is happening in the market. FIIs from USA have pulled out investment worth 2 lakh crore rupees in last 6 months. With that kind of money outflow, Sensex and Nifty could have tanked 40 to 50%, but thanks to retail investors, they supported the market, and hence the correction is 15% so far. So that's the entire equation of interest rate, economy and stock market. When interest rates fall, there is high liquidity in the market, and that results in jump in stock market. But too much liquidity creates inflation issue, and in order to control this inflation, central banks have to increase the interest rate, and that suck out the liquidity from the market, hence the market falls. Now that Nifty has fallen below the levels of 16,000, the key question is, can it crash even more? So the reason why markets are still falling is because there's a lot of uncertainty about how many more rate hikes can be expected from RBI as well as from US Fed. Since the inflation is not something that will come under control immediately, it is expected that there can be more interest rate hikes in the future to control the rising inflation, both in India and USA. And that is essentially the reason why markets are still falling. How much can Nifty fall more? To be really honest, nobody knows that. You can always guess and give a number, but trust me, nobody can predict the bottom with 100% probability. All I can say is that Nifty is at 16,000 and there's a good correction in mid cap and small cap sector, so markets are already looking very attractive. Now, how long will it take for the markets to recover? Well, I think that the entire 2022 would remain volatile. So there can be more pain ahead in the stock market. Now, the most important question. As an investor, what you should do in such situation? Should you buy or sell? So you should ask a few questions to yourself. First question is, why did you invest in stock market? Did you invest to make quick money in the short term, or did you invest to create wealth in the long term? The simple reason is, it is not the first time when stock market is corrected. In the history of Sensex in last 40 years, there have been many corrections. In the 90s during Harshad Mehta, Sensex tanked almost 50%. During 2000 dot-com bust, Sensex tanked another 50%. During housing bubble burst in 2008, Sensex tanked nearly 60%. During COVID, Sensex tanked nearly 40%. And these are major corrections I am talking about. There are n numbers of cases where stock market has tanked between 15 to 20%. Yet every time the stock market has recovered and touched a new high. At individual stock level, this correction has been even brutal. For example, during 2000, Infosys tanked from the highs of 172 to levels of rupees 40. That's 76% fall. And today, Infosys is at levels of 1500. There are thousands of cases. I remember during 2008, ICICI Bank crashed more than 80% from levels of 260 to rupees 48. Today, it is at levels of 700 after the correction. Yes, there are cases where the stocks never recovered and many companies went bankrupt. And that's where you should ask yourself what type of companies you have invested in. This is probably the most important question at this point in time. 2021 was an exceptional year where even the junk stock went up to crazy levels. And many young investors ended up investing in those stocks without any idea about fundamentals of the company. So you should have a look at your portfolio and identify, have you invested in loss-making companies? Because loss-making companies run on money raised from the market, and during rising interest rate cycle, borrowing is not easy. Hence, they might face cash crunch. And if that happens, it can be disastrous for loss-making companies. In 2021, we saw a lot of loss-making tech companies getting listed at premium valuation and jumped multiple times post-IPO. But now, majority of them are down up to 70%. So it is a big lesson for those who blindly invested in loss-making companies. Now, I am not saying that their business is bad. The only problem is those loss-making companies were available at crazy high valuation. Next, you should check, have you invested in companies with high debt level? Again, during rising interest rate cycle, the borrowing becomes difficult as well as the borrowing rates increased, and if the company fails to raise more debt, then it can badly impact its business. So essentially, you should invest in companies that are generating good amount of profit and have good amount of free cash flow, so that they can utilize this money for growth and capture more market during difficult times, because weak companies will struggle during such difficult times. So if you have invested in poor grade stocks, then it is time to rebalance your portfolio and invest in quality stocks. And if you have already invested in quality stocks that have high profitability, low debt levels and good revenue and profit growth, then you should utilize this fall as an opportunity to accumulate those stocks. Having said this, there is one final question you should ask yourself. Have you invested in companies with ultra high valuation? I'm sure during 2021, many of us got carried away and invested in high growth stocks at crazy valuation. In fact, many people simply neglected the valuation part. But now that market has corrected, those high valuation companies have fallen badly. So check the valuation before you invest. If the quality stock is available at good valuation, then you should accumulate the stock. It doesn't matter whether it is a large cap or mid cap or small cap. As long as company is fundamentally strong and have a good valuation, then you should accumulate it in a systematic manner. And that is exactly what I am doing in this situation. I am adding quality stocks at good valuation on every dip. If you want to learn how to identify quality stocks, I have a complete course on money management. And if you are too confused about where to invest, then I would simply suggest invest in Nifty index on every dip. Friends, at this point in time, I can only say that please try to avoid thinking too much about the interest rate hike and what will happen to the market. Spend your time in identifying quality business and invest systematically. India is going to become the third largest economy in the world in the future. That's for sure going to happen. Every stars are aligned and nobody can stop India's growth journey. I've already created a video on why you should invest in India now, and try to understand that stock market is cyclical in nature. When it rises too much, it falls. And when it falls, eventually it rises. The only reason why people lose money in the stock market is because they end up investing when the markets are at the peak because of greed, and end up selling out of fear when the market falls. Whereas you need to do the exact opposite. And that decision can only be taken when you have the right knowledge and conviction. And of course, the courage and patience to remain invested during the falling market. And that's not the cup of tea for everyone. I want to close this video with a quote from Warren Buffett. He says, "Stock market is a device to transfer money from impatient to patient." Now you decide which category you fall into. If you like this video, do share it with your friends. I will see you next video. Till then, take care.